What is up, guys? Today I'm gonna teach you guys how to trade gold. Um, the software I'm using to backtest is called Software FX. Pretty good. It's not free. You have to pay $100 to get it, but it's a good simulation. It's like being in a hyperbolic time chamber. Like it really helps out your skills. Yeah. But anyway, I'm gonna get to it. I'm gonna teach you guys how to trade gold. Um, Using bytes. All right. So let's just get to it. First and foremost, I start off at the weekly. On the weekly, what I'm looking for is price ranging up. I'm not really gonna trade on the weekly, but this is how I start from the top down to basically top down analysis going down. First and foremost, I see that it's ranging up. Um, how can I tell that? It's very simple. It's the low that took out the high and the high that took out the low. So in this case, the low right here took out this high up here. Alright, which indicates that hey, it's going up, it's biased. Alright, so this high was formed around here and then it dropped, but it hasn't taken out this high yet. So right now it will be considered ranging. Alright, so right now it's bullish, but it's ranging on the weekly. On the daily, again, if you want to be able to tell what is going on, you don't want to go all the way back here because price isn't here. You don't need to worry about all that. What you need to worry about is where price is at right now, which is over here. Price is over here. So if price is over here, what are we gonna know? What are we gonna do? We're gonna tell where price is going. So right now, price is bullish. Alright. How do we know this? Again, remember what I said? It's the low that took out the previous high. This low took out this high. It's going up. Alright. In this case, this high was formed and then made a low right here. Okay. And then shot up. But in this situation, it hasn't taken out this high yet. It just stopped here, which means this is considered ranging. It's just within this, it's just ranging. Okay. But if where prices are right now, we're considered it's bullish. All right. So as of right now, on the daily and the weekly, is bullish. So H4, where prices are right now is right here. This is where prices are right now, which means in this situation it is bearish. It's been going down. Okay, so this, remember what I said, this high took out this low. This high took out this low. This how you tell bias, when this high takes out this previous low and then forms this this low, then this high took out this low. So now it's ranging down. Alright, this is how you tell. In this case, this, after it formed this low, it took out this high over here. Alright, so this is what ICT is. This was taken out because this is liquidity, but it's still trending down. If you want to learn more about liquidity, just YouTube it or just wait for me to drop a video on it. But this is still considered ranging down. Alright. Yeah, so right now it's just going down. Then this low was formed over here. Alright, so what we're gonna do next is go down to the H1. Alright. So on the H1 we can see that it's trending up. How do we know? This low took out this high. Alright, and then this, we're not really considering these little tiny things as anything because it wasn't really a huge push down, you know. But this high was, so we're still considering this as a low. This high is still up here, right? And then now it's just like ranging downwards. Okay. Yeah, so we could consider that as ranging downwards. On the M15, we can go off of this. So this is where it gets meaty greedy. So right now on the H4, right, we can see that a fair value gap was formed here in this area right here. Okay, let me get rid of this. On the H4, a fair value gap was formed here. Price digged in because it's trending up, right? Price digged in around this section right here, which indicates that hey, it wants to get a little higher to take out these highs right here. This is ICT. So a fair value gap was formed here. Price dug deep into the fair value gap, which indicates that hey, it wants to push up on the H4. All right. So on the H4, this is the fair value gap right here. On the H1, excuse me, this is the fair value gap right here. Price dug in, took out liquidity. This is liquidity right here. This is liquidity. It dug into the fair value gap here, then displaced up with this huge candle over here. With this huge bullish candle over here. Formed the fair value gap right here. And then took out liquidity again. Right here, and then dug deep into the fair value gap, which indicates it wants to take out this high. So we put it up here. Alright, we could get rid of this. Dug deep into the fair value gap, and it indicates that it wants to go up here. Alright. So on the M15, again, fair value gap. Dug deep into it. So now it wants to shoot higher. It already took out liquidity, which is this fair value gap right here. And it dug deeper. Now it wants to come up here. So this is the algorithm. It wants to come in. This is where it's gonna go. So on the M5, what we're gonna do is we're gonna wait for price to give us an entry. Right? So come here, and we're just gonna wait for price to give us an entry. Boom. So that could be an entry right here. This huge fair value gap came down, took it out. So you know what I'm gonna do? I'm gonna enter it. It dug deep into, if you know the market maker sell models, market maker buy models, it went into this fair value gap and displaced upwards. So now I'm indicating, so now it shows that it wants to go higher to take out these highs over here. Okay, so what we're gonna do is we're gonna just enter. Now, yes, this is, so a lot of people are gonna say, oh, this is inside of Tokyo. Yeah, so if you trade the models like Tokyo takeout, New York session, 90-minute cycles, yeah. But the more you get better at it, the more you start realizing that, like, you could also trade doing Tokyo. As long as you understand where the market is going. In this case, I'm really good at telling buyers, so I know that once it dug deep into this fair value gap and then started displacing up, even doing Tokyo session, that is gonna take out these highs. So what I'm gonna, this is gold. So what I'm gonna do is I'm gonna enter actually. So 446. So let's say 446. Let me see. Yeah, so in fact, you can also hold all the way up to the H4 as well. You don't even have to wait to the H1. So that's how, this is the price model, really. Let me see. So I can even, so I'm gonna enter twice. Ooh, this is like 1,106 points. So I'm gonna enter twice actually to show you guys what I mean by ICT model. So my stop loss, let's say my stop, because I'm holding it for a while, let's say my stop loss is around 208. Since my take profit is 446 points, my stop loss is going to be 215. Let's say 215. All right, so I'm going to buy, and I'm getting out up here. All right, so I'm also going to enter again and aim for the H4 high, because I believe it's gonna go up there. So 112. So 1120. Oh, sorry. 215. 1120. So yeah, so I also have my take profit off here and my stop loss is down here. So yeah, so a lot of people say, hey, you can't enter doing Tokyo. That's like it's ranging and stuff. If you know buyers, yes, you definitely can. Let's see what happens. Boom, see? It just shot straight up. Let's see if it comes back down. Yeah, it seems like it's just ranging up. Look at this. I'm at $6,786 already. Floating PPL, floating PL. Boom, look, it's just going up. It's just ranging up. I'm at 11,583 right now. Look at that. Now I'm at 10,000, 20,000. This is the this is literally bias. This is literally, if you understand bias, it dug deep into this fair value gap, shot up. And this is the market maker buy model right now. I entered at this displacement up. It took out liquidity. I entered at this displacement. I waited for price to range here. This is the market maker buy model advanced level if you understand bias. This is the range. It manipulated down here into this fair value gap, and then it displaced up. Let me change the color so you guys can see it. It's crazy, right? It manipulated down into this fair value gap right here, right? And then put this maybe blue or something. Yeah, so it ranged, manipulated into the fair value gap, and then displaced up towards this liquidity, this external liquidity, and we shot up. Alright, so if you can understand ranging, manipulation, displacement, then you're good. Like, you can literally be doing this all day, every day. Like, you don't even need to use the 90-minute model or anything like that, Tokyo takeout, anything like that. If you understand literally ranging, manipulation, displacement, you will always be on the right side of the market. Yeah, so let's just keep going and see what happens. Will it take it out? Looks like it's coming down. Boom, took it out. I'm out the trade. Now that I see it displaced up and I'm holding for a long time towards the H4, a lot of people will not move they stop loss into profit. Well, I'm not those type of people, so I'm gonna move it into profit. Yeah, I'm gonna take my trade into profit. I'm sorry. You know, I'm gonna secure $1,521. So even if it comes back down to take me out, I'm gonna be good. I'm gonna be set. Yeah, let's see what happens. It just took out, remember, it just took out the H1, my take profit on the H1. All right, now I'm aiming for the H4. Let's see what happens. Will it take me out? Oh no, it will not take me out. Look at that, boys. It just kept ranging up. Mind you, this is only on a Monday. I just made $20,000 on a Monday, guys. It's ridiculous, off of just knowing range, manipulation, and this displacement. Like, this is really it. And notice how I traded doing. Look at this. I entered doing, what is this? This time is doing Tokyo. Like, this is a literally Tokyo session right here. I'm trading. I entered doing Tokyo session, and it never came back down. It never came back down. Look, ranging, manipulation, displacement. Took this liquidity out, external liquidity out, and it's still going towards the H4 liquidity. Like, this is the buy model, guys. It's simple. A lot of people don't understand this. Like, let's see what happens. Is it gonna keep going up to take out? Oh my gosh! I show you. That's it, man. I'm not even about to get. I'm not about to get into all this no more. So let me see. Remember, I started out with $10,000, and now I'm at $33,490. Let me see if I could pop out my trades. Right. So yeah, same day. This is gold, guys. On gold, my drawdown was literally 91. Can you believe that? My drawdown was literally 91 points. My drawdown was 91 points. I was in the trade for like 7 to 10 hours. I held, and my TP was 941. My stop loss was 935. Shot up. I profited $6,690 on the first trade, and profited $16,800 on the second trade because I held to the H4. And how many pips did I catch? On the first one, I caught 446. On the second one, I caught 1,120. And off of just a market maker buy model, range, manipulation, distribution. That's it, guys. This is literally ICT. This is just ICT. I'm done. I'm done for the week. I literally just made like what, 23,000 right there. Oh yeah, I literally just made 23,000. Shit crazy, ain't it? That's it, man. I'm done. Thank you guys for watching, and I'll catch you guys on the next video.